Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest technology updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Imagine moving the GDP of the United States every single day, instantly, globally. That's exactly what on-chain FX is starting to do. And XRP, HBAR, XDC, and XLM are at the center of it. Welcome back, Wolfpack. Hope everyone's having a great Saturday. Today, we're breaking into something massive in crypto, a shift that most investors are completely missing. And if you're holding XRP, HBAR, XDC, or XLM, you're going to want to pay very close attention to this video. For months now, we've been talking about crypto's killer use case, the one that can move trillions of dollars. And it's not on NFTs. It's not gaming, it's payments, specifically on-chain FX. But as always, I want to thank everybody that takes the time to like and subscribe and comment. These three things really help out the channel and myself and bring this content to the broader crypto space. So I thank you everyone for doing that. Now consider this. The foreign exchange market trades roughly 7.5 trillion per day, and projections suggest it's climbing even higher. Compare that to the total crypto market cap, still under 4 trillion, and you start to see why this is so enormous. To put it in perspective, that's like moving the entire GDP of the United States every single day across crypto rails, something that historically was impossible without banks and clearinghouses acting as middlemen. I want you to think of the Roman Empire moving legions and supplies across Europe and Northern Africa. Logistics were everything. Without supply lines, the conquest would fail. Networks like XRP, HBAR, XDC, and XLM are the digital supply lines of global finance. Move too slowly or with friction, and the system collapses. This isn't going to happen overnight, ladies and gentlemen, but the warning signs are already appearing. Today, we'll break down exactly what's happening, the networks involved, and why this matters for holders of XRP, HBAR, XDC, and XLM. I want to talk about the rise of on-chain FX. So what exactly is on-chain FX? Simply put, it's foreign exchange happening directly on blockchain networks, using crypto and stablecoins for settlement. Why does this matter, you're asking? Because traditional FX is slow, fragmented, and constrained by legacy systems. On-chain FX offers instant settlement, global reach, and 24/7 availability. Stablecoins are the bridge here. USD-backed coins dominate over 90% of the market, but non-USD stablecoins are emerging rapidly. For example, Australia's digital dollar, AUDC, recently received regulatory approval from the Australian Financial Services Authority to provide non-cash payment services. While the volume today is small, the implications are massive. AUDC is live across multiple networks: XRP Ledger, Stellar, Ethereum, Base Solana, and XDC. Each network sees small amounts now, but it's the foundation for future multi-chain adoption. Think about it like this. AUDC may only handle 71 million in monthly transfers today, but even at this early stage, it signals real-world adoption of non-USD stablecoins. Think of this. The introduction of the telegraph in the 1800s took decades to change global finance, but eventually it revolutionized trade and informational flow. On-chain FX is similar. The infrastructure exists today, but the scale and adoption are just beginning. Well, happy Saturday, everybody. Getting ready for another blizzard here in the Northeast. Excuse me. I want to welcome everyone, our new members to our Patreon and our new members of our membership channel. And I just want to touch on something, quickly right here. A lot of people in the comment section I read have been asking about, supply shocks and everything like that. I just want to make one case of what I was talking to one family office that we've worked for many, many years. And I want to just bring one similarity about what happens when certain things are added to lists, what happens when things change. So I can try to give you a real life moving analogy. And again, none of this is financial advice. This is just my opinion, and anyone who retains any capacity, okay? You have a lot of arguments on right now about silver going to the moon, 300, 400, 500. Okay. You know, I believe, in my professional opinion, again, that silver will go to 200 in that neighborhood. It's not going to do that tomorrow, but this is not financial advice. And the reason that we believe this, again, this is my opinion, not financial advice. I want you to go back and look at what happens to any mineral when the U.S. puts it on a critical minerals list, okay? Right? Write this down. I want you to use lithium and uranium as the examples. When they got put on the list within 5 years, they tripled in value. Now, these are plays that we took ourselves and we put into play for people that retain myself and our organization in any capacity. Matcha green tea, love it. So we knew, following the trends, that when certain events happen, we can take advantage because it opens up a probability of a certain occurrences happening again, right? So go back and think about what I just said. So when silver was put on that critical minerals list, it was worth $40, but it triples in 5 years if it pays attention to what the other metals had done, if we're using that metrics, okay? This tripled essentially in 5 months, if you look at where silver is right now. So you go back and you see what's happened in the months since it was added. So that's unbelievable, right? But as people in our space who actually look at this and pay attention to these obscure facts that help create alpha, right? I always tell you, I don't watch TV. I pay attention to world economic news and what's going on all over to pay attention to these obscure facts. And again, if you're looking how we take the PhD out of PhD and the soap opera of chaos and translate that into a way to make alpha and take your trading game to the next level, please join us in our Patreon and it'll make a lot more sense. But knowing this fact, we said silver should go to 153 in 50 months. We projected that using that math, using what happened with lithium and uranium. And we had rode those positions for people that retain a steady capacity. So as they made it to the critical minerals list, lithium was a home run. We knocked it out of the park with that one. Uranium has been a little bit more messier, but again, still created alpha. So if you take those and you average them out, that's where we got the 143, 145 from. So we got involved and it went straight to 80. And it's like unbelievable. But then it goes higher, pulls back. But if you look at this, right, why I'm throwing this out there to you guys and understand that when certain things happen, nobody sees it's coming. There's no writings on the wall. So understanding obscure facts when things happen, that was in metals being added to things. We see XRP right now being adopted and used at Deutsche Bank. It's being built from the top down, ladies and gentlemen. A lot of exciting things to happen. A lot of exciting things to happen. But here's the most exciting part. No single network will dominate FX. Multiple networks will share the market. Think about it. 8 trillion per day is flowing globally. There's plenty of room for XRP, HBAR, XDC, and Stellar to thrive simultaneously. Right now, AUDC's adoption is modest, but history shows early adoptions matter. Let's break that down, the networks. XRP Ledger, seeing growth in stablecoins like AUDC and other tokenized fiat. Stellar, XLM, holds the majority of AUDC supply, bridging traditional finance with crypto. XDC focuses on trade finance, but building settlement engines that could integrate FX. HBAR, emerging in regulated tokenized payments, particularly in the Asia-Pacific region. This is like D-Day in World War II. Success wasn't just one army landing on the beach. It required coordinated multi-front operations. Air, sea, and ground working together. Multi-chain adoption works the same way. XRP, HBAR, XDC, and XLM must all operate in concert to capture critical financial beachheads, ladies and gentlemen. And again, none of this is financial advice. This is just my professional opinion. Not financial advice. Think of the rise of the internet in the 1990s. Early networks like AOL, CompuServe, and Yahoo coexisted initially, eventually reshaping global communication and commerce. On-chain FX networks may follow a similar multi-network trajectory. The takeaway, on-chain FX is multi-network, and all 4 networks are early players with huge potentials, ladies and gentlemen. Again, I want to talk about stablecoins and their growing role. Let's dig deeper into stablecoins. Let's drill down here. The total market is around 300 billion, but monthly transfer volumes already exceed 10 trillion. Stablecoins are becoming the backbone of on-chain FX, particularly as non-USD coins begin to gain traction. In Europe, Euro-backed stablecoins recently surpassed 1 billion in supply. In Australia, AUDC gains regulatory backing, unlocking real adoption. In the UK, digital pounds will launch soon, enabling UK-backed stablecoins. Think of stablecoins as the railroad networks and tracks of the 1800s. Trains, transactions are useless without reliable tracks, connecting cities, networks. Stablecoins provide the rails needed for trillions to move instantly. Like Stalingrad in World War II, victory depended on supply lines and adaptability. Stablecoins allow networks to adapt to liquidity and regulatory pressures while maintaining uninterrupted flows, ladies and gentlemen. Non-USD coins are the next frontier. This is why 2026 is being called the year of non-USD stablecoin adoption, as institutions and networks expand their capabilities. The takeaways for holders: the multi-trillion-dollar FX market is coming on-chain, and networks like XRP, HBAR, XDC, and XLM will directly benefit from increased activity and network usage. Let's talk about institutional adoption. Institutions and the big players are already experimenting with tokenized FX and stablecoins on-chain. The Hedera network executed FX trades for UK institutions using tokenized collateral. Lloyds Banking Group and Aberdeen Investments leveraged Hedera for the UK's first FX trades backed by tokenized assets. JP Morgan's Texas is testing Euro to USD settlements on permission networks, paving the way for public blockchain integration in the future. Consider the Cold War. Countries didn't fight openly every day, but strategic positioning and readiness determined long-term leverage. Early adoption of these networks is the same. Who controls the infrastructure first will have lasting advantage. Think of SWIFT in the 1970s. Standardized bank communications, enabling global transfers, reliability. On-chain FX could be the digital equivalent, moving trillions faster, cheaper, with full transparency. These trials are critical because they show scalability in real-world applications like XRP, Ledger, HBAR, XDC, Stellar, all seeing early adoption in institutional experiments, a major signal for future growth, ladies and gentlemen. This isn't hypothetical. This is how the next wave of multi-trillion-dollar financial flows will move on-chain. Pulling back, here's the big picture. 8 trillion a day FX market moving towards on-chain settlement. Multi-chain adoption with XRP, HBAR, XDC, and XLM. Stablecoins expanding beyond USD. Institutional trials demonstrating feasibility. Think of Alexander the Great succeeded because he managed multiple supply lines and communication routes across vast territories. Just like networks today must coordinate multi-chain operations to move trillions globally. The introduction of ACH in the 1970s slowly changed finance behind the scenes. On-chain, FX is the digital equivalent, but faster with more transparency. This is exactly the type of shift most investors aren't noticing yet. It has huge implications. Real-world network activity will increase token utility. Transaction volumes will drive network relevance. Early adoption gives holders strategic insight into the coming wave. So what's the bottom line? On-chain FX is crypto's killer use case, ladies and gentlemen. Stablecoins, especially non-USD, are the bridge enabling this. Multiple networks, XRP, HBAR, XDC, and XLM are positioned to benefit. Institutional experiments signal the adoption and scale are coming fast. If you're holding onto these assets, now is the time to watch this space closely. The multi-trillion-dollar shift in global finance has already begun, and the networks we've discussed are at the center of it. If you made it this far, I appreciate a like. And lastly, I want to say this, right? There's so many things changing right now and to pay attention to. I always tell you, pay attention to what's quiet. What's quiet right now is the development of crypto moving to front stage. We see the BRICS unit and the east side of the tranche replicating and trying to emulate what's on the west side of the tranche. The west side of the tranche is evolving. You're seeing the future come. I use that analogy at the beginning of the video, and if you're brand new here, I'd go on some rants. As adoption comes, you can sometimes find patterns. And when these patterns show, that's why being the remora is a lovely thing and we feast on everything. But again, there's going to be no signal, no mass attention moment to tell you when they flip the switch and things are happening. None of what I said is financial advice. Nothing I'm saying now is financial advice. Things will probably go a bit lower as the disputes may arise. The problems in the Middle East may heat up and go kinetic. But right now, as Bitcoin has lost its luxury, no one is really paying attention to that anymore. The money flew into metals. And when that story comes to an end, the easy money will flow back, in my opinion, and anyone who retains us, into the crypto space. People always ask, will I get a chance to pick up things at rock bottom on a discount? You're seeing very discounted levels here, and we probably will go a bit lower, but you got to do what makes sense for yourself. Have a great weekend, ladies and gentlemen. None of this is financial advice whatsoever. I want you to think about it. The very people who shaped the global financial system have had their eyes on XRP from the very start. They debated it. They tried to control it. They tried to slow it down. And yet here we are. This isn't hype. This isn't theory. It's documented influence at the highest levels. And here's the crazy part. While retail investors panic, all the leverage is gone, metals are quietly stabilizing, and XRP is holding its structure. You're watching history unfold. You're seeing a rare moment where everything aligns quietly. The system, the assets, the players behind the scenes. If you're still here, still paying attention, still thinking instead of reacting, you're already ahead of most people. Years from now, this period won't be remembered for panic. It'll be remembered as preparation. Stay patient, stay grounded, and above all, pay attention to what's quiet. Markets don't do this by accident. That's not noise. That's structure. You're a part of it. You're witnessing it. And you'll look back one day and you know you understood what most missed. Thank you for being here. I appreciate every one of you. Have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for information and entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues to develop on the scene and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love all you guys always.